Let me come to you on the way forward now, what the future model's looking like, because, like I said, there's been a shift towards secured. There are some challenges because we're heading into a high interest rate era. Cost of funds are high, yields are low, don't have that flexibility on the deposit rate front. How do you, imagine maneuvering through some of the challenges now in the next couple of years going forward?
Well, firstly, I must place this firmly on the table. I'm not worried at all. In fact, I'm much, much more positive for a few simple facts. Firstly, if we look at the consumer, ultimately the banking industry today is what the soap industry was in the 70s. You had one bar of soap. It was used for washing clothes. It was used for washing yourself. Fast forward that 30 years forward, you've got a wide variety of soaps which are used for manifold purposes, including cosmetics, to just the pure basic purpose of cleaning. The purpose of differentiation in banking is not yet well served, and consumer uptake is going to be very strong as a consequence of that. That's the first fact. The second fact is, what are some of the fundamental prisms of differentiation? Let me give an example. It's quite well known that banking, payment banks, direct banks, internet banks offer value and convenience. Our banks offer that. But one big understated factor of offtake was safety. 57% of urban India is fundamentally worried about their accounts getting exposed to financial frauds perpetrated with the UPI ecosystem, and therefore they do not end up using their primary bank account for digital payments. And the payment bank account becomes a natural secondary digital account, which people uptake, choose and use. So there could be many prisms and therefore many reasons for people to uptake formal banking services more. And finally, a little provocatively, typically when you lend to a customer, you tend to start looking at margins. You mentioned cost of funds, and you start looking at what are the NIMs you make. We look at it very differently. The model is very simple. Today, we serve over 50 million users every month. We earn 20 rupees per user per month. By the way, we tend to spend 18 rupees. We are firm believers in the fact that in a 500 million underbanked opportunity in India, the 50 million can become 100 million, and the 20 rupees can become 40 rupees. And you can do the mental maths yourself of what that means in terms of revenue growth. But most importantly, we believe that that model will finally serve India well.